Warriors. How's everyone doing? What a wild night last night. Asia used to be the dead session. The times they are changing. Hi, Ariel. Are you the same Ariel from Twitter? Kevin, how are you? Mark, you are? Oh, nice to meet you. Thanks for dropping in. Ariel's a very good technician. Hi, Shepard, Ren. Where's Brock? Okay. Good, Sinatra. Okay, so let's take a look at what's happening here for a turnaround Tuesday scalp. Crude is way overdue. I mean, Steve showed that real skinny up channel that it's been in for a while. So here we are on the 4-hour. We've been diverging for a while. And I also think that maybe the NASDAQ, my way, okay. Also think the NASDAQ's a good shot. We finally took out the high of the move yesterday. You know, we had taken out the previous week's highs and we took it out here, but, you know, pretty glaring divergence. Look at this on the daily, pretty glaring. So they're both a shot with some type of money stop. You know, this was the week I was looking for some inflection points. I thought it may have started last night when the S&Ps broke all the way down towards this 3070 level. Look at this. So, you know, one thing I just want to mention, and I really would have had an aggravating night if I didn't learn how to take partial profits. So, you know, and plus it was news going my way. Scott told me what Navarro had said, and I saw it come across from Blake. Blake let everyone know, you know, and they pushed it on the alert. So you see what I mean? What a great job and the dedication that the crew has here. This was, you know, dinner time or after dinner when this happened. And, you know, you still got a push notification to your phone. So even when your eyes are not on the screen, these guys, their eyes are on the screen. Okay. So, you know, that may have helped you out knowing, you know, it's just like the crash we had in March. If you just went to sleep for another month or so, you didn't even notice a change. Hi, Monica. How are you? So dollar continues weakness. You know, I was long from Sunday night and got out yesterday, and Euro's leading it. So, I mean, there's nothing I could say that looks bad about Euro. In fact, you know, this whole thing was grinding, grinding, grinding. I mean, there was nothing, as Steve would say, impulsive about it. I don't know. Are we just going to blow here up towards these highs, 115 again? Maybe. Hello, Brandon. And gold, just keep an eye on this. I still think we have a shot for 1780. Look at this. We have a 1, a 2, and we're going to get a 3 up here in the gold. So the third drive in gold, which is going to be a third on the daily, you know, here's 1, here's 2, and we still haven't taken out the high of the move at 1765. I don't believe we did it yesterday. No, we didn't do it yesterday. The high was 763. So we missed the high of the move by, you know, a buck or two, couple of bucks. Still think we're going to make new highs. I think silver is smoking. Blake showed that the silver could break out. No, it's not. You know, silver is still dogging it. So I really don't know what to do with that. But I think there's a decent shot for a turn in crude. Again, some shorter term stuff. And taking a shot in NASDAQ to, you know, when you look at some NASDAQ stocks, I'll just ask you a simple question. I asked my mentees this weekend, And we had the pretty big up day yesterday. We'll see how it comes today. But Apple's the leader, right? This must be, did they have earnings yesterday? Okay, so even though we're way up here in Apple, look at this. Microsoft, which has been a leader too on the 4-hour, diverging. So the MAGA stocks, here's Google, hasn't made a new high yet. And here's Amazon making a new high, but diverging too. Anyway, those are a couple of things that I'm seeing here today. And we'll see what happens with the Dixie, if we're just going to wash to new lows. I'm thinking that we're going to get some type of dollar turn before we go to new lows and then head back up towards 98.5, but we'll see. Okay, so my bet's on NASDAQ. I'm risking 70 pips here, short from 07, and taking a shot on the crude up here, risking $1. Well, maybe someone could text Oana to log in and log out again. And then she'll be able to hear us, and you're going to want to hear Blake. So I'm going to bring Blake in right now. Okay, while you guys are raising your hand, why don't you guys type something, tell Oana to, here I will. Log out. Come back in. Usually that works, guys. Okay, so if you haven't yet, you have to at least give this a shot. I really believe in a 90-day period to make any valid assessment of anybody. But here you go. You could just try it for $1 here for 10 days. And if you'd had it last night, you would have known the Navarro news, and then you would have heard the Kudlow denial. What an administration, you know, two key guys reversing each other every day. I think it aggravated Paulie a little bit too. And especially if they're trading off of it. I don't know if they're doing that, but, you know, I saw a cartoon with, you know, showed the president getting ready to make a tweet, and he was at his desk with a bunch of screens. So who knows in this environment? And I think that's about all I have to say for now. And I'm going to bring Blake in and see what he's thinking of the dollar here and some follow through that we're getting in euro. And it's always better when the euro is outperforming cable. And again, it's reflected in EG, and EG continues to march along, you know, approaching the 61.8 level here in another 100 pips. We're about halfway back here. So I wouldn't just start launching euro pound up here. Well, I told you what I like. You know, I've been looking for this time this week for inflection points. I know it sounds crazy because of the change of seasons. I think this is the second day of summer. So we'll see if that plays out. I won't even mention the eclipse that a lot of guys give about 5 trading days to see if there's any impact in the markets. Okay. So any questions before I hand it over? Okay, you're very welcome. Oh, good, you could hear us? Okay. All right. Great. Are you a member yet, Oana? Invest in yourself. And you are? What about gold? All right, last one, the gold. You know, I've been talking 1780 to 1800. And, you know, when you look at this formation that's starting to set up, you know, everyone's talking 1800. And one thing I've learned is that when everyone's looking for one number, 1800, it either doesn't get there or it melts through it like butter. My guess is that it might be like the upper 1780s, but I'm not ready to short this yet. It hasn't done anything wrong. It's starting to diverge a little bit here, but I'm really waiting for this third drive in the gold, and this weekly line comes in. Where is it? I know my gold charts look like a mess. Let's see. The third drive line will come in 1792. I hope that helps. Okay, we're still, 34 away from that. Okay, everybody. Blake, how you doing today, buddy?
Sorry, I was looking for my volume. My mute button.
I know I'm like CNBC to you. You turn the volume down.
Yeah. Good morning.
Good morning, buddy.
Morning.
What are you making of Euro follow through? What are you making of the Euro follow through here?
Oh, it's great. I mean, this is what we were looking for. Unfortunately, it's not giving you an opportunity to get long if you're looking for it, because if you got the analysis this morning from ForexAnalytix, we were breaking out and we were below 113, and the target was that we're going to be moving up to the 618. Hold on, my office is really loud here. Hold on. Okay. So we'd be moving up to the 618 retracement, which is the 113.27. We're almost there. We're about 13 pips away from that. That's going to be the 618 retracement. Remember, this is a pennant formation, so it's bullish. We had good data overnight out of Europe. If you look at all the data that was out, overnight, you can see all the PMIs. All the PMIs. Well, I say all of them. We had a few of the PMIs out of France that were above 50. That's expansionary, which is awesome. But you can see the improvement across the board in European data, and that's obviously helping the euro rally. So not only that, this is, there's a few real key components of this euro rally, and I'm just going to illustrate them for you, show you on this chart. First of all, it is a 38% retracement of this move. When you have a 38% retracement, typically what that means is you're going to get a continuation, right? So if you take this, that'll be that, and move to 118 is likely over time. That doesn't mean we're going to go up there tomorrow. Doesn't mean that's exactly what's going to happen in the next week. But over time, that's where we should go in the euro dollar. The good news is when you have this type of development, then you can clearly see from a intraday trading standpoint, look, I just need to be buying dips in the euro. That's it. I don't necessarily need to be selling it. I just want to be buying dips and trying to play it, to the long side from here on out. Until we start reaching above the 117 level, and then you're going to start being a little bit more careful. But the euro dollar is clearly showing us that that's the way we're going. Now, does that mean that we have to only go there? No, because we could end up rallying, stalling here, maybe double topping at 114 and reversing. I mean, there are things that can happen in this move that could alter. There's definitely things that could happen that could alter this move, and one of them could be, we see a very strong risk aversion move in the next, I don't know, maybe in the next, week or two, and that gives us, the dollar reason to reverse. But as of right now, the euro is strong, and it is moving. And now we have to just start looking for those of you that are not long, you got to look for places to be long. So like in a move like this, you want to look at now it dips back down to, probably below 112.90. If you can get down into 112.80s, that's probably a place to be on the long side. Will you get an opportunity to be on the long side? I don't know. It's a pretty strong move. Now, a couple of things that have happened from last night, which we should note, is that this move that happened last night that you're talking about, that I sent out a headline, alert to the ForexAnalytix traders. We had this headline from Navarro. He was on Fox, and he was saying that the China trade deal's done, and I was like, what? And then next thing you know, we had this massive move lower in equities. At that point in time, I was along some pound New Zealand. I took that off the table on that spike higher. I was what else was I trading last night that I took off? I took some profits, which was I was short some Dow futures, and that was nice because I got out like somewhere down here, like a 250 pip drop and 250 point drop, and I told everybody, hey, there was a lot of people in the chat room last night when that was happening. I'm like, I'm going to go ahead and take some profits here because we had movie night with our, the kids. So I booked them, and Paul Franco's like, he called me. He's like, man, did you see this news? I'm like, yeah, they're gonna try to correct this news. So just be really careful chasing this lower. And here we are. We rallied back. Now look at the S&P where we're at right now. We are just above the 127% extension of that move overnight. So you got to be a little careful with this, with this rally. I'm not saying that we will stop here, but if you think about this, what you're seeing here, let me just something like that. Okay. And you can see this resistance here. I'd be really careful with buying risk up here. Can we squeeze higher? Sure we can, but we are right up against some, in my opinion, probably some pretty key resistance for the day. And remember, it is Tuesday. What happens on Tuesdays? Nothing ever good happens on Tuesdays, right, Dale?
I don't know. Tuesday mornings, things can change.
We might get turn around. Well, I don't know.
Yeah,
I don't know if we're going to get turn around Tuesday today.
Yeah.
It's like we never get turnarounds anyway. But you know what? Like I said, I would be a little bit nervous about just knowing where we're at. Doesn't mean you have to be short. I'm just saying if you're long, just be a little careful while we're up here. But yeah, we've seen some pretty good volatility overnight. It's really quite amazing how you get the trade secretary Navarro gets on Fox News, says the China trade deal is over. You have this is a 1.5% sell-off in the S&P overnight. Oh, it's 2%. I'm sorry. It was a 2% move lower. And then you get a almost 2% move higher back to where we started, and then a rally into new highs. It's crazy, right?
I hope he made some good money. I hope he made some good money.
Oh, I'm sure his cronies probably made a killing there.
Yeah. Otherwise, if he didn't make good money, this guy must be, irreparably stupid. And I'm saying that because he belongs in an administration that micromanages stock indices more than they do in a market making company. He must have known that he would have to come out. The fun part is that he made the statement in a way that it was impossible to misinterpret. There was no way that you could say that perhaps you didn't clearly understand what he wanted to say, right? It wasn't like obscure or, in some indirect way.
It was like, yeah. When is it Trump that had to clarify? I was
watching. Kudlow did.
somebody had to go out and clarify.
Kudlow, and then Trump tweeted about it, and then he came out and he said like that my words were like clearly misinterpreted. But the fun part is that his statement didn't have any room for misinterpretation. Plus, let's state the obvious. What he said, for whoever has like an ounce of brains, I mean, yeah, we know that, right? I mean, I've shown on this webinar how far behind, some time ago, how far behind China was in regards to the target they had, the annual target they had set. I mean, they were so far behind that would be almost impossible for them to fulfill the target. So not only the guy comes out and says it, he says it in a way that's that cannot be misinterpreted, and he says something that's once you look at the numbers, it's common understanding, and then he has to walk that back in a way that's it makes you look ridiculous.
Okay, sorry, Steve. I'm going to have to just say this right now. Just while you guys are here, if you're long the euro dollar, just be really careful with it. When we're up here at 113 and a quarter, and we're right at highs, but we're also at the 618 retracement. So if you happen to be long overnight, I'm not saying that this is a good place to short it. I'm just saying if you're long, this is probably not a bad place to be moving stops up to break even, taking half of your position off to take some profits, things like that. Being proactive when you get to a key fib level. And as the 618 is, like I said, if you're using ForexAnalytix and you got the update from this morning, a couple hours ago when we're below 113, and here we are at 113 and a quarter. Just be a little careful. I mean, we're probably going to come off here. I would assume that we come off and we backtrack back to 113 today, and probably figure out where we're going to go from there. But just like I said, if you're on the long side, be careful. All right, Steve, going back to what you were saying as you're getting all worked up about
I just find it amazing that probably there is no SEC anymore. I mean, we are actively looking at everybody now just throwing bombs at the market and clearly, openly manipulated the price action, and it's now so normal that nobody even pays attention anymore.
No. It's like I mean, those comments shouldn't be legal. No. I mean, think about this. Is one
ruining
of the
game, man.
Well, this is one of the reasons why. And I was actually having this conversation with one of my best friends last week. He doesn't trade the markets. He works in a completely different industry, and he came over because we hadn't seen each other since the pandemic. And he came over and we sat outside and had a couple of beers and just caught up. And I was just talking to him about my business. He understands my business, and to a certain extent, I was explaining to him how bad the liquidity has been over the last few years, and the reason why it is because things like that happen. When you're an institution, right? You're let's say you're an institutional type of trader, and you've got a few hundred million under management, or maybe a couple billion under management, or whatever you have. And you're sitting in a position, and you happen to be long the S&P, and you're long, I don't know, 150 S&P contracts, and all of a sudden those comments come out. You get stopped out because obviously you're trying to not lose more than 100 grand overnight, whatever the case may be. You get stopped out on some stupid comment from the key trade official in the U.S. administration, and then you get stopped out. Then it rips back up, and then up to new highs. That's what provokes people, institutional size, to say, you know what, I'm not even going to trade here. I'm not even going to be in these positions because you can't win. You're long and you get crushed. In a situation like this where you would have been fine and you would have actually made money, but instead you locked in a, X amount loss when you should have been, just making money, or the opposite can happen. But because you can make money or lose money that quickly on a dime, it makes the market extremely unpredictable, and that prevents traders from taking big positions in the market, which reduces liquidity, which makes these moves that much more volatile. And so,
and what makes it more ridiculous is the fact that supposedly there are regulatory bodies to prevent that. For example, the SEC. And I mean, these guys, like a couple of weeks ago, they're like, demonstrating how good they are because they caught a guy that made something like $135,000 because like he bought a stock and then he was like creating like news about it on blogs and forums and Reddit or whatever the hell it was. So like they catch the $135,000 guy, which I'm not saying it's the right thing to do, right? But you have, for example, people like coming out, making extremely important statements, which they immediately walk back, which are really market moving. Or, for example, we had last year Elon Musk about Tesla. Do you remember that they had the agreement, to sell Tesla? I mean, the guaranteed agreement to sell Tesla for
20.
for 420. And I mean, these people are either not even called to answer to anybody, or worst case scenario, they get a little slap in the wrist. So market participants that are watching that, they're like, this is completely rigged. You know what I mean? Because even the bodies that are supposedly made to to fix the problems of the system, that they're just ignoring the rules.
Yeah, and it's ridiculous. But anyway, I just wanted to illustrate kind of what happened overnight, and it makes it for a pretty challenging environment, because when you sit there and that happens, you get a lot of people that just basically remove themselves from the market with size. They still participate, but it's easier to risk manage these types of moves with smaller position size, which then reduces liquidity, and that's what makes the moves even that much more volatile, especially when you have to have order flow that comes through the market. And that's why that when we get analysis from whether it's JP Morgan, Citi, Goldman, which we get, you should see my inbox is 50 emails in the North American session alone from most banks. And then I get order flow of what's coming through the market. That's, I tend to pay a little bit more attention to that over the last couple of years, because order flow will move the market because the lack of liquidity. So, when you got less people just participating, I have to pay a little bit more attention to it, because the order flow that goes through, it's like it tends to move the market because no one's standing in the way anymore. So anyway, that's neither here nor there. But guys, just real quick, again, if you're trading the euro, just be careful with it around the 618. Try to be a buyer on dips. I'm going to let you guys go over all the other charts out there. But good luck today. And Steve Stelios, good to hear you guys' voice. Dale, have a great interview. And gents, it's all yours.
Have a great day,
sir.
mate.
All right, thanks. Have a great one.
I think I have Megadeth with us today, whose account has been suspended, I think. Anyway, Megadeth Metallica is going to be with us. So anyway, I just try and give some guys that aren't well known a chance, and then they go ahead and get, thrown off the team, the Twitter team. Okay. Anyway.
I think we have to clarify that, we bring a lot of people on. It doesn't mean that we endorse people that we bring in. It's just exactly like you said, we give some people a platform to say what they're all about. But
what's wrong with lifting people up and giving them a chance to become known? You know what I mean?
Obviously, if we're aware that somebody is not proper, we're not going to give them a platform, but we do the best we can. All right. So basically, Steve, you're never going to be a guest here, okay?
You should have been an attorney, man. Very good. Very good.
Yeah, I've had my share of
I forgot.
battles.
That's right. You learned how to be a mouthpiece.
Yeah,
All
and
right.
actually, you were talking about, Steve, you were talking before about regulators. All you have to do is see where the chairman or women of regulatory agencies go afterwards.
Yeah, exactly.
All you have to do is that, and you see these moves, which are insane amounts of money involved. So you say,
Yeah, and they're not even try to do something about it, because the simplest thing they could have done is, like, put a huge cool down period after you leave a regulatory body.
Yeah.
So, if you don't like it, don't ever take the job, right?
Yeah.
But, if you want to take the job, you'll know that, you cannot go work for the entities
the other side,
that you're regulating just after you leave your job. Because obviously, I mean, if what you're expecting to happen is you go to a regulatory body, you stay there for a few years, you make friends with the people you're supposedly regulating, so you can then get a job with them and get paid, like, multiple times the money you get while you're in the regulatory body. What are the chances that you're actually honestly regulating them during the time, right?
Yeah, good question.
Yeah.
Yes, okay, so
I see your cartoon, Steve.
Hey, we can see you, Dale. You need a haircut.
I know, man. I'm Ringo Starr at 80 years old. All right.
So
you can see more than my cartoon.
Yeah.
You can also see what I have to.
Oh,
my son just brought me his Lego.
Oh, you better fix it.
Yeah.
So like Blake said, we had Navarro stirring up things a little bit overnight. Bizarre world we're living in. Data-wise, we had some, again, like Blake said, we had some good PMIs out of Europe, out of the UK as well. The thing to note is that they were better than expected, but we're still hovering around the 50 mark. So basically, we're not expanding or contracting. So it's a good thing that we're not contracting, but still we're at levels which are pretty severe at the moment. But a recovery is expected eventually. The question is how quickly it's going to come and to what extent it's going to be. I still I'm a little bit pessimistic. I hope I'm wrong, but I don't think we'll be able to go back to where we were before this whole COVID thing started, within 3-6 months or whatever the markets think. What do we have? Well, we don't have any numbers now. We have new home sales out of the US in an hour and a half, so no numbers at the moment. What else? It's been a weird morning again. There hasn't been anything else data-wise or in terms of major developments. I'm just trying to figure out these markets and equities in particular. I think there will be a time to be bullish. I just don't think the risk reward is good here. Having said that, if you've been short equities, you've been losing money for the last 2-3 months. So I still think we'll see a new high. Ideally, I want us to see a new all-time high in the S&P. If we do that, then I'd love to short some there, but I don't have a position at the moment, and I'm still watching it. Otherwise, oil also doing well. There's no, risk on sentiment is prevalent. Look at commodity currencies. Look at the Norwegian kroner. I'm still long silver, and some of my Norwegian kroner position, and I like those. So my positions are still slightly geared towards the risk on. So I'm not complaining, but I will be looking at points to reduce these positions further. I have taken some profits on those, and I will take some more profits along the way. Silver 19 is my level for another third, and Euro Norway shorts. Actually, I don't have a level now. I'm just looking at the price action, but it's looking pretty good today. Otherwise, it's been quiet. Steve. I mean, I don't know if you saw anything of note this morning. It's been pretty,
those that are clients of ForexAnalytix were on the Daily Roundup webinar. I did that yesterday. It was actually an excellent timing because I was able to talk about the market on 4-hour charts. So yesterday, when we had the Daily Roundup webinar, we were testing this Euro USD pennant. I said that, listen, probably we're breaking higher from here, and that's quite an expected development given the fact that we had a corrective pullback. I mean, this is no way you can interpret this formation there as an impulsive pullback or whatever else. At the same time, I mentioned how the Kiwi USD was probably leading higher since that had already broken higher. Also, keep in mind that with yesterday's overnight dump that we had with the statement about the US-China deal, Kiwi came down, perfectly to retest this broken triangles trend line resistance, this time as support. Aussie is now finally following suit, breaking through resistance, and I think that opens the door for a move towards 71.50, 72 cents. So in general, we spoke yesterday at the daily roundup how the vast majority of the instruments are actually positioned for a continuation higher. The S&P is also just making the move, breaking through this, clearly corrective channel. So I do think there is probably more upside here. Now, I'm quite skeptical that we're going to see a new all-time high in the S&P before we see a deep correction, but I think it is quite likely that we're going to see a higher high, meaning, a move above the previous high that we had here at 32.33. So likely an extension towards 32.60, which is quite an important resistance area before we can see a deeper correction. Nasdaq at all-time highs, no big surprise there. DAX also breaking through an equivalent corrective channel, 2% higher on the day. I think it might keep doing well for at least a few days. And of course, the first signal was the structure of this DXY correction, because we said since the beginning that now everything has become one trade. So just by monitoring what the dollar does, you can have a very good idea of what's happening with risk. I mean, it's quite a nice risk proxy. And this rebound high in the dollar was perfectly set in, a bearish pennant, right? So we've broken below it, and we seem to, we seem to be under pressure. Bullard, keep my eye on asset bubble risks.
And increase them. That's what he meant to say.
Sorry, but nowadays, it's a little bit of a crazy market. I mean, the vast majority of the comments I read are either tragic or comical. There's nothing in between.
Yeah. By the way, our friend Jason is making a very good question. He's saying, and then you can continue, Steve. Sorry to interrupt.
No problem.
He's saying with fundamentals of the virus no longer factoring, how high do you think the markets will go with no correction? It seems any correction is immediately matched with intervention and jawboning. First of all, I don't think the virus is no longer an issue. But Jason, I think you're absolutely right. I think in the long run, things are going a lot higher. And they have shown that they're going to come in and step in and do whatever it takes to keep markets going higher. So if you're just a long-term investor, I would just go long and forget about it. But I'm not a long-term investor. I am a trader as well, so I like to try and pick better entries. Obviously, I might have made the wrong decision now because we might not get the dip. I still think we'll get it, but I think in the long run, you're right. We're going a lot higher.
Listen, this is an extremely hard market to trade, unless you're a very short-term trader, right? And the reason it's hard, it's not because you're, stupid, and that isn't as an answer to a specific person. I mean, I'm generalizing now, right?
Talking about me. Yeah.
It's because there is a huge gap between logic and common sense and reality, and it is extremely hard for a human brain to actually bring those two together. Because on one hand, if you're not brainless and completely clueless about anything that's happening, it makes sense that you feel extremely skeptical about, like, buying risk, and very well so. I'm not saying this market is still rewarding reckless buying. There's no question about it, and that's exactly the market they want to have, right? And especially until we get the U.S. elections, they will do their utmost to keep the market, no matter how big of a bubble it becomes. I mean, already valuations are like super extreme. I mean, multiple times above what is average, normal, or whatever, right?
These tape bombs don't help either. I mean,
yeah.
Well, normally what would be a breakdown, turns into being just, one candle event.
But on the other hand, that was another indication. If you remember, Dale, prophetically, I was saying the same thing yesterday. I was saying that one huge risk is that we now have a market that is so fragile, and the reason that it's so fragile is because there is no fundamental basis of where we currently are, which means that, no matter what comes out that is negative, until they come in and support the market with, statements, news, outright buying, through various special purpose vehicles or whatever, anything can break this market. I mean, anything can make this market go limit down in zero time, simply because the market doesn't belong up there. I mean, think about it like that. I mean, it's like,
musical chairs, I think.
Yeah, exactly. Yeah. So that's an extra risk that you have by being long, meaning that what happened yesterday, that you can find yourself within like 5 minutes being 2% underwater, it will happen again and again and again. And not only that, don't fool yourself. There will be periods of like 3-4 days that you might find yourself 10% out of the money. So this is the classic market that it can, on average, keep grinding higher by, let's say, 0.5% per day to 0.3, 0.4, 0.5% up on the day on average. And then within 3 days, give back what you've made in 2 weeks. That's the market. That's how the market is going to go. So, you want to be long, you have to be very selective. You have to use instruments that give you more safety. For example, you want to do it through options, buying options, which in general is not a good play, because, the long-term way to make money is by selling options, not by buying options. But under these circumstances, selling options can prove to be like, a big mistake. So, it is what it is. Now, what we have in hand, and that's all that matters, is that dollar is breaking down. There is no question about it. And unless we get more bombs that are not being, rectified immediately by, opposite bombs or whatever, tape bombs, you should see this continue for at least several days until we finish up this quarter and half year. Several percent, everything that is associated with risk is clearly moving. I mean, Oz is breaking out, Q is breaking out, USD CAD is holding somewhat better. That's why, as I said yesterday, at least I said it on the daily roundup, I'd rather be long the Aussie or the Kiwi than being short the USD CAD. Having said that, watch USD CAD here, because USD CAD is testing this triangle's support. So if it breaks through from here, I think it can attack once again this descending channel's trend line support just below 132. So, I don't think it's a smart idea trying to fade this general theme. I think you should just, either follow this theme, which, to be fair, it's not a good opportunity having to do with stocks, but having to do with shorter moves in FX currencies. For example, Aussie just started breaking out a few hours ago. So, for example, I said since yesterday that, this is at least a short-term opportunity. I mean, you could buy. That's why you see these two marks here. There was somebody in the Daily Roundup webinar that asked me, okay, how would you trade this in the short term? And I said that listen, it breaks through like, this previous consolidation, like 69.40, you can buy it there. You can look for a move towards 71.50, and you can have your stop loss, let's say, just below 68 cents. So, you have at least a 1-to-1 risk reward ratio to begin with. You have a clear formation here. I mean, it's a triangle, so there's a good chance that this move higher is going to be terminal, meaning that we're going to see a bigger reversal following that. But why not? I mean, if you're a short-term trader, you can make money by trading this move to the upside. I mean, you can make 150, 200 pips. Same thing with people that bought the Kiwis breakout on Sunday night. I mean, you bought that breakout, or you were lucky enough to be in front of your computer when we retested it yesterday night, and you bought it there. You're already comfortably in the money, and you can, look for another extension towards this like 66 cents area. So, there are opportunities if you want to trade this market short term. Now, if you're asking me if you want to be trading it medium term, I mean, would I be buying here the S&P or the Nasdaq or, any of these risk-on assets to hold it for several weeks? The answer is no. I have no doubt in my mind that they will do their utmost to keep everything in check at least until November. But that's the same thing they wanted to do in February, and didn't work out for them. I mean, yeah, they pulled back everything by throwing trillions and trillions in the market as fast as they could. You have to give them that. But still, I mean, we had a huge sell-off, and definitely a damage to the economy that cannot be walked back just because of wishful thinking. And it's not going to be walked back because of wishful thinking. And once the recovery goes on for a few more months, people will realize that we do have a recovery, because obviously there is only one way to go from a complete lockdown of an economy, and that's up. But going again up doesn't mean that we're going to even approach the previous economic activity. So once the market participants realize that recovery doesn't mean that you erase whatever happened, quite the opposite, then we're definitely going to have another leg lower. So keep that in mind. USD yen. Let's see what the USD yen is doing, because usually it's doing absolutely nothing. Here it is. So USD yen is testing once again this support area. So that is quite a significant short-term support area. Of course, my advice about USD yen remains the exact same one. Do something else than trade it. Now, if you are some kind of a masochist and you really can't help yourself, but you've like made a bet with your wife that you want to trade the USD yen, or I don't know what else, and you really want to trade this, okay, this is like a descending triangle, a breakthrough 106.50 should point lower, with the next objective being the 61.8 of that move higher, which comes at 105.20. So the path of least resistance at a break below 106.50 is to the downside. But whenever you get any real, rush to do something with USD yen, just go to the daily chart, zoom out, look what is the market you're talking about trading, then zoom closer in and look what has happened in the very recent past, just what has happened here, what has transpired in price action during 2020, the amount of false breaks in all directions, and then reconsider if you're actually willing to trade this. Personally, I let other people trade it, and I'm more than happy that I've done so.
Amira Chen, yes, so there is a futures contract on Dixie. I believe so still. I used to trade that futures contract. It was on the New York Exchange. Isn't there, Steve?
I think so, yes.
Yeah, and there's CFDs if you're out of the country.
Oh, yeah, CFDs, absolutely. I mean, actually, CFDs, coach, believe it or not, yesterday my broker sent me yesterday an email telling me that, let me actually open my emails and tell you. There we go.
ICE. Okay, Rob's saying they traded on ICE, so there is a futures contract.
Exciting news. Now you can add share CFDs trading to your strategy. All the biggest companies in the world are in the headlines right now. Trade, Apple, Facebook, Tesla, and many more, all at 0.00 commission.
Yeah. CFDs on, that might be another sign.
Yeah, that is, though all those are signs that you never see at the start of bull markets. Let's just say that, right?
Yeah.
So yeah, the general theme is what I just said. Dollar weakness for a few days, risk on for a few days. There was another person, I had this question asked yesterday on the daily roundup, if I'm still short the S&P, and I said that yes. If you remember, when we had this move lower, I took the advantage of offloading a decent part of my position because, it had become, quite big because I had also accumulated Nasdaq exposure. So now I only have half a position short the S&P and half a position short the Nasdaq, and I'm going to be more than happy in, adding some to them a little bit higher. But one has nothing to do with the other. I mean, the question is, okay, since I was saying since yesterday that we're going to be moving higher in risk, why didn't I just close, all of my position? The answer is because, I have a totally different time frame, and the risk parameters I have in mind still apply. But that doesn't prevent me from, analyzing the market for you, telling you what I see in the short term, because they're two different things. And each of you might have a totally different time frame and totally different, trade plan about what you want to do. So, irrespective of the fact that I'm still, half a position short the two indices, I do believe that they're probably going to continue moving higher within the next few days, unless we get another tape bomb or whatever.
How about crude here, Steve? I'm starting to get a little negative candle here. I'm wondering.
We've talked about crude and nothing has changed. And the situation here is as follows. Crude has had a massive, brutal recovery higher. I mean, in percentage terms, this is now a 250+% move to the upside, right?
Yeah.
So that's like a massive move. But
so if you think it's going to go to 28, what would you need it to break that blue channel into?
Yeah, exactly. But there is no risk reward anymore in being long here.
Right. I was talking
no
about.
risk reward whatsoever. That doesn't mean that it can't keep crawling higher.
Yeah, it could go
towards
to 44.
like 42. Yeah, it can. It can. Yeah. But in my opinion, you weren't long oil during this move, and you're thinking of buying oil here. I mean, this is the recipe of a disaster, right? Because
it would be a Meshuggah trade.
Because even if you get vindicated in this case, if you keep trading, with that kind of mindset that you're trying to buy already, overdone moves, you're not buying things when they're cheap, but you're buying them when they're extremely expensive, or I mean, in the short term, right, and overvalued, or you're not buying things when they're, or you're not selling things when they're expensive, and after a huge move to the downside, you're looking to perhaps sell too late. At some point the market is going to blow up in your face. There's no question about it. So, you had multiple chances to buy crude at lower prices. I mean, we kept saying about, this reversal, and I kept pointing to the fact that this reversal, I said it since the beginning, that once crude reverses, it's going to move much higher than many believe. And I still believe that's the case. But once we see a pullback, so I do believe that crude can keep on moving higher. But I think that, you should be looking for buying opportunities much lower than we currently are. $29, as I've said, is a nice entry area. And I do think there is a very good chance we're going to get the opportunity to buy crude at that level. Of course, most probably that's going to happen once we see a deeper correction in stock indices. Now, gold and silver, we already said that yesterday. Gold has already been breaking out. Silver is still consolidating and reluctant to follow gold higher. That hasn't changed the general thesis, which is a break above 1805 should more or less take us to $19, where I think you should be quite careful, because There you go. Because $19 is not only the previous high, it's also this descending channel trend line resistance. It's a little bit lower, but in the grand scheme of things, no big deal. So bottom line, I think after one more move higher, perhaps it's going to be time for the metals to also produce some type of a deeper correction. Now, I'm not expecting the metals to roll over and die and go in a bear market. Let me be very clear. But that doesn't mean that after the moves that we've already seen, because remember, middle of March, so we're not talking about ages ago, we're talking about 3 months ago, silver was just above $11, right?
Yeah.
So we've already seen a huge move to the upside. So it's very easy. I mean, let's say we see another attack higher towards like $19. I mean, seeing a pullback from $19 to like, $16 or $15.50, it's still going to be a corrective move of the previous massive move to the upside. So a lot of people, of course, are going to be jumping the gun thinking that, that's it. Metals have found a high, told you so. They're now collapsing. They're now going to be going back to $1,000 gold and, $10 silver or whatever. But personally, yeah, 8 or whatever. But personally, I'm going to be buying, especially silver, because I have no exposure in silver. I do have physical gold, but I have no silver. I'm going to be buying silver in any given opportunity, just to make myself clear. Okay, let me go through some of your questions. Can you look at the cable? Yeah, we had a look at the cable yesterday on the daily roundup. I said that it's lagging somewhat. So you can see here on the daily chart that the pound is one of the few of the popular dollar pairs that hasn't yet broken out from its equivalent corrective formation. And as you can see closer, here's the 4-hour chart. We're testing it though. We're now testing. So let's say the pound is like 1 day behind the other currencies. The other ones were either breaking out yesterday or at least they were testing resistances yesterday. It took a little bit longer for the pound to come here, but still this looks like a corrective move lower to me. And it looks like a very decent probability scenario that once we break through it, we are at the very least going to retest the previous high at 128.13. Platinum. Let's have a look at platinum. There it is. So here's platinum. Quite a prolonged consolidation, but nothing bearish, right? Now, not easy to trade this for one main and basic reason. First of all, we can now delete this and perhaps clone this trend line resistance and see. Yeah, so probably something like this. So the reason that would make me somewhat skeptical in buying platinum, despite seeing a correction, I mean, a formation that looks, in my eyes, this looks 90% corrective, is the fact that I've said many, many times that this 875 is a huge area of resistance. So even if and when we break through this little channel, we're going to be extremely close to 875. So if you want to be on the safe side and you want to trade this, I think you'd rather wait for a breakthrough 875. I think buying that breakout is probably going to be a nice opportunity. Alternatively, if you want to turn short, I don't think you should do that unless you see a daily close below 800 at the very least. Okay, so you see how many days of a horizontal, more or less, consolidation we've had. As long as that's the case, I think you should stay put and not trade it in any direction. I do favor a breakout to the upside, seeing how this has unfolded. But I gave you clear levels. I think you should only consider trading it once we see a breakout from either of these two levels. When valuations don't matter anymore, evidently a risk-free return is a God-given right. They've ruined our markets. That's more than true. They've actually destroyed financial markets. I mean, price discovery, which is the main characteristic, is completely shot on the head, and there's going to be huge side effects from that. We've already been seeing it, actually. And I think future historians, at least people that study financial markets, are going to be teaching this era as an era of utter stupidity and economic destruction. Hello, Steve. Could you mention pound USD? And we did that. And the pound yen. Yeah, absolutely. Shall we keep our existing long positions in WTI or close it right away? Yeah, I mean, if you're long crude oil and probably you're deep in the money, yeah, I mean, you should keep it. I would have already booked some of my profits. I can tell you that in advance. But you have no reason not to keep some part of the position until you at least see like a big daily candlestick reversal. Until that happens, you can keep riding this trend, because who knows, it can take you like another $2-3 higher, which $2-3 higher is a decent percentage gain, right? So I mean, there's no reason why you should like immediately dump whatever position you have.
But you never go broke taking profits.
Yeah, but you can. I mean, you can actually. I've told you what my argument against that is. You can actually go broke taking profits if you're taking profits too early. So if you don't let your gains, materialize and increase, while oppositely, every time you are out of the money and you lose money, you give excuses to yourself not to close early your position. In essence, what you end up doing is you're skewing your actual risk reward to very unfavorable. So you cannot actually end up going broke by taking profits if you also do the opposite with your losses. But as a general rule, I'm totally in favor, of partially taking profits on the way, because locking down some of your profit is always a good idea. Dale, so what happened with our guest? Do we actually have him or not?
I don't know. I haven't really been able to reach him. I've sent him a few tweets, so it's not happening.
Okay. Okay, so I can answer a couple of questions more than
we have Dan Popescu tomorrow, your favorite gold guy, and a real interesting guest on Thursday and Friday. I'm really looking forward to talking to this gentleman who's with Martin Weiss, and I read a book that influenced me in the 70s that Dr. Martin Weiss wrote. So, but Anthony Chung is with us, and I think Anthony used to be the voice of one of those squawk services, and that should be a great interview. It's Mike Larson, who's with Weiss Rating Agency. So the rest of the week should be pretty good.
Okay. So here's the pound yen for our friend that asked before. Let's have a look at it on the 4-hour chart as well. There it is. So here is the pound yen. Not a good sign that we got rejected once again from this descending trend line resistance. So, if you're looking for a shorter term trade, I can tell you that buying it, as long as we can't break through this trend line resistance, not a good idea. So the path of least resistance in the short term remains lower. I would only, consider buying it on a breakout from here, in which case I think we might see a very decent extension to the upside. But despite seeing the possibility of a bullish breakout in the pound USD, as we said before, keep in mind that at the same time, as we just showed, the USD yen seems like it has either broken down, if you want to see this like a triangle. I mean, if you want to really take into account all the wicks, this seems to have been already broken down. Or if you want to, be a little bit more permissive, you can look at it as a descending triangle, in which case we're just about to break out. But in any case, if the pound USD is breaking to the upside and the USD yen is breaking to the downside, pound yen might not be doing much, right? So as I said, just look at the pound yen chart, getting rejected once again from that resistance area. So as long as that's the case, I think you either want to be short against, this high for a short-term trade, so against 134 and change, or stay on the sideline. If you're looking to buy, stay on the sideline until we have a confirmed breakout to the upside. Okay. Question about copper. Sure, let's have a look at it. Here it is. So copper still holding quite nicely in this ascending channel. Very nice for the bulls that this 255 level that we had talked about multiple times, 252, 255, that it was, a key area of resistance. We sliced through it, which is a good indication for the bulls, but it did work as a support once we retested it. So, against that level, and as long as we remain in this ascending channel, the path of least resistance remains higher. I have to admit, though, that since I expect risk to sour for at least a period of time in the not so distant future, I would be quite careful, because I do think that, another retest of this channel a little bit higher might produce a rejection and probably a deeper pullback in copper. So, having already seen this move to the upside, I would be quite skeptical. I would be much more comfortable buying copper after a deeper pullback than buying it up here. Although in the very short term, it looks like, it might appreciate somewhat more. 113, you can buy, okay. Ticker IOC and Coalindia. What are these companies? I'm assuming they're companies near us. Question also about USD CAD we already covered. I said that it's testing key support, a break below it should, okay, let's have a look at it on the daily chart, because we only had a look at it on the 4-hour chart. So here it is on the daily chart. Let me, actually I don't have this channel on the daily chart, so we can draw it together here. So this is the channel I was talking about on the 4-hour chart. And I was saying that, failing here can even produce another leg lower before higher, although keep in mind that, the USD CAD, the Canadian dollar is not performing as well as other commodity currencies. So if you want to be short USD CAD, I think it's a better opportunity to be long something like Aussie USD or Kiwi USD in comparison. And we had a question about the Nifty and some tickers. Here's the Nifty. What's out here? We're now at this zone we were looking for quite some time, right? 10,500, quite a formidable area of resistance. You should be careful here. I would keep my eyes open for a reaction from here. Bearish reaction from there is going to be quite a nice indication that we might be turning lower. Indian companies and IOC and Indian Oil Corporation is biggest refinery in India, IOC. Okay, I'm very curious to see what this company is doing. Oh, sorry. Not looking very healthy, I can tell you that much. Yeah, not an easy trade where it currently stands, I can tell you that much. And especially given the fact, if you're saying that it's oil, yeah, it is oil corporation, it says here Indian Oil Corporation, given the fact that, oil is really getting fatigued up here, I would not be buying it up here. I would be much more likely to buy it at a, deeper pullback than
Before we go, Steve, can you take a quick look at Enron?
Enron, you said?
Yeah.
Symbol?
Oh, they went bankrupt 20 years
ago. Oh, that Enron! You're trolling me. And it was like, you know, I'm a little bit tired. It was like,
how about WorldCom?
Yeah.
Anyway.
Have you read the book about Enron, by the way? It was quite...
No, I didn't read it.
Yeah. Although, to be honest, you know something, with what we've been seeing nowadays.
Yeah, it would be nothing. They'd be like choir
Yeah,
boys.
I mean, I don't think they would even register, really.
Yeah. Yeah.
I mean,
be choir boys. I'm telling you.
Yeah. In all honesty, they would be. I mean, these guys must be, you know, talking with each other and be like, you know, we should have been a little bit more patient, right? We chose the wrong era to do that, because back then, you know, in some cases they would actually do something about it. You know, if they waited, you know, 15 years or whatever.
Oh, like Ivan Boesky, you know, I mean, he went down and, you know, insider trading. I mean, the whole Congress does it.
Insider trading, yeah, it sounds like a joke nowadays.
Greed is good, Gordon Gekko. Anyway, thanks for reviewing, Steve. Are you through?
Yeah, let's.
All right, crude's fading. You know, if you took it at the beginning of the session, you have, let's see, what was the high there? 41.60. So we're down about 60 pips.
Yeah,
so
keep in mind that area was the 161.8%, the $40 area, and I had mentioned that yesterday or Friday it was, that the $40 area is actually important for two reasons. First of all, it's a psychological level, right? Second of all, it's the 161.8% extension of that last leg lower that we had in crude. So, you know, as good as level as any for a pullback, right?
Yeah. So what I would do is, if you took it early in the session, is book half. You know, don't try and make your account with this one trade. And now pull your stop down to BE, and the worst thing that could happen now is you made money. And with that money, take a little piece of it and become part of our community. And remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Thanks, Steve.
Thank you, Dale.
All right,
Thank you,
everyone.
See you
Thanks for hanging out with us, everyone. Good hunting the rest of the day. And that's it. Adios. Back at you guys.